Hello, hello. Thanks for sticking with us on the Dev Den. Make sure to stick around with two more great sessions for you. Grab one of those headphones at the back for the full silent disco experience. All right. Up next, we're going to hear about Stacks versus Ethereum. We all know the outcome of that fight, right? And please welcome to the stage Blaize from Trust Machines.
Okay. How do I signal moving forward? All right, we will figure this out. Hello, hello. Excited to speak to everybody today. Some fans in the crowd. Today I'm going to be talking to you guys about my experience transitioning from building in the Ethereum DeFi community to building in Stacks, why I did that, and what it has been like. So a little bit of background on myself. I've spent the last dozen years working in startups as a founder, head of product, and COO, fintech, prop tech, and most recently in crypto. Been full-time in crypto since 2020. Ended up joining, like a lot of folks, during DeFi summer, doing the crazy degen food farming nonsense, and then eventually ended up starting a product company and then a fund after that. Recently joined Trust Machines about a year ago as the general manager who's leading our Bitcoin DeFi efforts, and have been building a handful of protocols, the soonest of which will be launching in about 2 or 3 months. So what we're going to be talking about today is the experience of moving into Stacks as a development ecosystem, why one should think about choosing a Bitcoin L2 over an Ethereum L2, why I personally chose to build in Stacks and my team did as well, and then what that experience has been like. And we'll talk about the good side, and we will also talk about the ugly side, and what needs to be improved for this ecosystem to really flourish. So diving in, I think a good place to start is why are we building in Bitcoin in the first place? And something to point out here, this is a trope at this point, is that we have, I think it is over 80 Bitcoin L2s as of latest count this morning. These are all startups. Keep in mind, they're nascent ecosystems. Stacks is probably the most developed of all of them. It is still very much a fledgling ecosystem to operate in. That means there are going to be challenges and frictions greater than you would find outside of Bitcoin L2s. You really need a reason for making this bet, and you need to be clear with yourself what the bet is that you're making. Because you're operating in a nascent ecosystem like this, though, there is much more upside that you can build towards, assuming that you're successful. So on my side, when I considered this question about a year ago, the real thing that came to mind for me is what is actually going to be here in 20 years? And when I look out over all of crypto, even looking at things like Ethereum and Solana, what I see are startups that are still attempting to find their product market fit, whereas Bitcoin actually has found it as its store of value hypothesis. What that means to me is that when I look forward 20 years, I actually don't know if I'm going to be seeing Ethereum and Solana existing at that time, or if they'll be overthrown by something like a monad. But I do know that I will see Bitcoin at that time. And that leads to several interesting implications when you think about it. Because if Bitcoin actually has existed for 20 years, it has at that point fundamentally changed the global financial infrastructure. And so it has, we'll say, a lot of upside or multiplicative potential to building on top of it. If you build on Bitcoin, you're probably, assuming your product is actually successful, going to build something that could potentially change the face of global finance and last for generations. Whereas if you build on these other ecosystems, you are very much dependent on that specific blockchain actually succeeding into the future. So that's why I ended up orienting around Bitcoin. But then, of course, the big question becomes, okay, I've decided I want to build something on Bitcoin. What do I do? 80 plus L2s, they're very difficult to tell apart. Different consensus mechanisms, different Bitcoin pegs, different types of operating environments. How do you choose? So I can walk you through why we chose Stacks on my team and the process that we use. The first thing, foremost, although it should not be underestimated, is that Stacks is actually live today on mainnet. So thinking about all of these different products, different ecosystems, the L2s are all startups in and of themselves. Probably if you think about them in a normal startup lens, 25% of them are not going to get past the white paper stage. They're not going to launch their testnet. They're not going to hit mainnet. Of those that actually launch, maybe 25% will exist a year from then. Of those, maybe another 25% could actually find product market fit. Stacks, having been around now for 3 years, has passed several of those milestones and is significantly de-risked compared to all of the others. Interestingly as well, Stacks also has a very passionate user base. And I say this is interesting because it's not a very functional ecosystem today. You can't really use it for very much in terms of DeFi. We're going to talk about that in a bit, and that's going to change. But even with this limited functionality, what you have is a core of rabid users. And why this is compelling to somebody who's building is because if that exists in a non-functional ecosystem, what's going to happen once this actually is unlocked and becomes performant alongside other DeFi layer 1s and layer 2s? It's a very good signal that there is a groundswell movement to build on top of. Additionally, what I've seen in my last year at Stacks is that the ecosystem has become very DeFi oriented in that they are trying to position the Stacks chain as the DeFi chain for Bitcoin. And you see that in how the community communicates, in what the developers are actually building, and in how quickly SIPs are ratified and passed that push forward the DeFi narrative. And finally, something that I think really shouldn't be underestimated is that Stacks is the only other compliant crypto outside of Bitcoin and ETH. It's kind of a trope at this point, but I think it actually, as of last week when all of the charges by the SEC were dropped, is a major deciding factor in terms of where capital is going to flow, both in terms of people holding Stacks and investing in it. So when we look at it today, it's a fairly good bet against the other L2s that exist. But as we think about where it's going tomorrow, it really becomes a no-brainer at that point in time. So everybody in the audience probably knows that we have a couple of major upgrades that are coming, but I really need to highlight how impactful that they're going to be. The Nakamoto upgrade primarily is going to increase block speed by 100x. And to paint a picture of what it's like to attempt to do DeFi today with 10-minute block speeds, imagine the user experience of having to go through, let's say, a basic lending protocol where you are depositing collateral and taking a loan. There are at least 6 steps in there, each of which is going to take at a minimum 10 minutes to confirm and probably another 20 to 30 to actually get locked in on Bitcoin. You're looking at a multi-hour experience just to take out a loan. Whereas if we increase the block time to 6 seconds, this is under 30 seconds. It becomes performant on par with other DeFi ecosystems. Nakamoto also has serious implications when it comes to MEV vulnerability for all these platforms, as well as slippage. So if you operate today in Stacks and you've used any of the DEXs, you know that you have to set your slippage tolerances to 4 or 5%, which is frankly ludicrous if you're actually trying to do any type of real trading. You cannot predict whether or not you're going to have a profitable trade with 5% slippage, especially compared to Ethereum or Ethereum layer 2s where you're setting it at 0.1%. So Nakamoto is really going to bring Stacks on par up to a performance level with Ethereum and the other DeFi L2s, which will completely unlock DeFi for the ecosystem. In addition to that, what we know is coming shortly, not entirely sure when, is SBTC. And this is, in my opinion, having learned quite a bit about it, going to be easily the best synthetic Bitcoin derivative on the market today. A couple of things I would really point out as being like the core features of this. Primarily is the actual storage mechanism for the Bitcoin signatures. So we've seen a lot of these L2s launch, and many of them are just centralized wallets, or at best, they are a centralized multisig, or perhaps a federated multisig. SBTC, outside of another one that exists in the Ethereum space, is the only one that's actually doing a genuine decentralized multisig. And this really removes a lot of the counterparty risk that you're going to encounter with the other L2s. It will be a major deciding factor, I believe, in terms of where people are going to deploy capital and actually use DeFi. On top of that, something that I have noted is somewhat unique to the Stacks ecosystem is that they are very transparent in terms of how they discuss and document what they're actually building. With many of these other L2s, it's quite difficult to really just figure out how these Bitcoin pegs are working and what the exact underlying mechanisms are. With Stacks, it's all out in the open. You can follow it on GitHub, and anybody can understand how this actually works. So this is why we ended up choosing Stacks, but there are a couple of things that I think I'd wish I'd known as a DeFi builder going in that probably would not have changed my decision, but would have made me a more effective operator in building my team and actually launching my protocol. So first and foremost, this is kind of obvious, but we really should dig into the implications. Forking is not an option. This is a really big deal when you're building a DeFi protocol because DeFi protocols store customers' money in their smart contracts. And so there is a very large attack surface, especially as the size of the protocol grows. So best practice, fairly well known if you're operating in Ethereum or Solana DeFi, is if you're going to build something that is anything like another protocol that exists today, you just fork the code from that protocol. You do not try to build it on your own because building on your own will introduce new security vulnerabilities. This is an issue in Stacks because obviously we cannot fork code from Solidity into Clarity. We are forced to port concepts instead. And porting is a much, much higher bar and more difficult to do. So not only do you have to write the code instead of just copying and pasting, which makes it hard, obviously, but you actually have to understand the underlying concepts at a deep level and the DeFi primitive itself. Not only how is it implemented, but why was it implemented in the way that it was, and what were the past implementations that failed and led to where we are today. And the reason you need to know this is because there's going to be a very strong urge to rewrite things, and you have to always keep Chesterton's fence in mind. If you don't know why something was built the way it is, but it is working, you continue to do it. So because of this, though, because you cannot fork and you have to have this deep conceptual understanding, actually building performant and secure DeFi in Clarity can be challenging. And this is why I think we see that many, many fewer apps have been built in Clarity than have been built elsewhere, because there's such a high bar. But there's kind of a flip side to this, a silver lining to this cloud, which is because so much less has been built, there is a lot of opportunity to bring things into the space that already exist in other DeFi ecosystems. And this opportunity won't exist in other Bitcoin L2s that are EVM, because what you're going to see is the major protocols from Ethereum will just fork into those L2s. Everyone's going to have to rewrite it for Clarity, so you really do have an advantage to starting here, where you can build your moat against any incumbent that exists today in Ethereum. A good example of this is that my protocol that we are launching in the next couple of months will take deposits from users and perform math on those deposits. And if you do this in the Ethereum ecosystem, you'll use something called the ERC4626 vault standard, which has been around for a couple of years and is just the de facto way of handling this concept. We will be the first protocol to implement that in Clarity. So very basic concepts that exist in DeFi have not been brought into this ecosystem yet, and it leaves a lot of room for developers to bring those concepts in and build an interesting new product with them. So moving off of this, another thing that I think everyone knows moving into Clarity is that Clarity is difficult, especially at first. The syntax is Lisp-based, which very few people are familiar with these days, and presents a lot of friction to most developers who are coming out of Solidity. And in addition to that, there is fairly severely limited expressivity compared to what you would find in a Turing-complete language like Solidity. This has led to it taking much longer to actually figure out how to build many of the simple things that you would build in an Ethereum context, especially because many of the design patterns that you'd find in Clarity are what I would call maybe nascent at best. People are still discovering the best way to implement certain basic DeFi primitives. So this has led to Clarity being generally a more difficult language to build in at first until you are familiar with how it works. And we're going to touch back on some of these because they're actually also upsides. But in addition to that, another difficulty that we have encountered personally is that the infrastructure and dev support is fairly limited. So infrastructure, documentation, and the auditor landscape are both what I would consider to be relatively undeveloped compared to Ethereum, Solana, other layer 2s. And you will, as a team, have to build many of these tools yourselves that you would just expect to exist elsewhere. Examples being indexers, linters, fuzz testing, and formal verification. That's something that you're going to have to take on your own if you want to use them. This also means, though, that if you're a team moving into the space, there's a lot of opportunity for you to build basic things that everyone's going to use. So please come do that. But there is an upside to this. There is a reason we chose to build in Clarity in the first place, outside of those drawbacks. And that is that Clarity was built to be uniquely suited to the DeFi context. So I mentioned limited expressivity, and that's probably what I think is the biggest complaint from my development team as they've started to build, or they've ported these concepts over from Ethereum. But it's important to recognize why that's the case. If you're building an application that is meant to hold value for users and transfer that value, especially large amounts of value, the core principle that you have to hew around is never losing your users' money. And Clarity very intentionally made choices that prioritize predictability and security over breadth of expressivity. And this reduced scope of language was done in order to limit the attack surface. And it has done that. And so we know, we hear this constantly, is that, for example, reentrancy attacks are not even possible in Clarity, and other things along those lines. But this actually is true. If you are building for a high stakes DeFi context, you want to use a language that will limit the attack surface, and you need to be comfortable accepting that limited attack surface and limited expressivity as a result. So two other things that actually have been quite meaningful for us in building are postconditions and the interpreted language, not compiled language. So postconditions basically being this concept that as a front-end operator, I can define what the outcome should be and that will actually be displayed to a user in their wallet. And this seems obvious to people who have only used Clarity. It is not present in any other DeFi ecosystem. You have to actually attempt to read off of your wallet, your hardware wallet, or hope that the wallet that you're using attempts to display this information for you, and most don't. It's a very obvious oversight from these other languages that is addressed in Clarity, and does mean that as a front-end operator, I can put conditions in place that the users can verify that will then be rejected by the blockchain if they're not met, ultimately being much safer for my user base so they can't be phished. And finally, the one that I would focus on here, and why I would choose Clarity over Solidity, is as an interpreted language, it means that you can directly see and read all code that is being run on the blockchain. And this means that anybody who has a basic cursory understanding of programming can actually go in and read what is being run the moment it is run, knowing exactly what will be executed and not having to take anyone's word for it. So how these have combined together, this is a quote from one of my engineers who initially was very reticent to adopt Clarity, is that there is a strong initial learning curve, but once you actually move through that curve, you are moving much more quickly than you would in Ethereum because the design space is so limited. So that being said, I want to circle back around to why I think now is actually the best possible time for somebody who's interested in building on Bitcoin to build in Stacks and Clarity. And that is, there is, like I said, huge opportunity for teams who actually understand how these DeFi primitives work and are strong enough to implement them in another language. And that being said, because there's so much friction, very little has been built to date so far. So you have a blue ocean open in front of you. You have ample VC funding looking at the space. And the primary issues that have prevented teams from building in Clarity in the past, the block speed, the lack of a good Bitcoin peg, will be addressed imminently within the next couple of months. Excuse me. So I would say now is the best time for a team to join the Clarity ecosystem and actually start to build. These are a few things that I would personally appreciate if you built for me. DeFi infrastructure, audit capacity, but of course, come in and build whatever you like. We'll be here to support you along the way. So with that, I'd like to say thanks for your time. Any questions, happy to answer. Yep.
Regarding infrastructure, what are certain things that you're looking for? Because it's a very big word, it's a very vast opportunity. And you did a great job explaining that opportunity, but if you can just niche down a little bit more on the infrastructure piece, be helpful.
Yeah, I will attempt to niche down on that a little bit more, and with the cop-out that most everything needs to either be built or made better than it is today. Excuse me, I'm dry throat, one moment. So the biggest things that we have noticed recently is that we are building our own indexing capacity. We're building our own APIs to actually query RPC endpoints. We're building our own RPC endpoints. We're running our own because there are not good providers in the space. So drilling down even to like the most basic idea that like you will have an RPC provider that allows you to make as many calls as you need doesn't exist at this point in time. So that's kind of a cop-out answer. I would say start at the base level and just assume that most things have been built to a cursory standpoint to allow basic development, but not enough for like a production DeFi use case. All right. Well, thank you, folks.